This video is a summary of the trades that we took for February this past month. And in this chart, this is exactly what I send out each morning. And the blue areas and the red areas denote support and resistance. And these are the areas that define where I'm going to be looking to take an action, so that during the course of the day when the alerts come in, you kind of have an idea as to why and what they represent. These areas are a technical measure, and then what I look for during the course of the day is evidence on a large block scale, evidence of accumulation and net selling on the futures contract, the S&P 500, large block orders on the stocks that make up the index, as well as I monitored in the money options. And so what I'm looking to do is monitor arbitrage activity. Everyone thinks that arbitrage occurs 1 or 2 days during the course of the month near expiration, but really it takes several sessions and a lot of work to set up those moves. And so what I find is a lot of large block activity at and around these areas that represent major pivot points. And so that's where I try to focus my orders in parallel with what the large block orders are doing. So on a very technical basis, I have this trading plan in place, but then during the course of the day, I look for those fundamental reasons to take an action, and that is monitoring the large block orders. So here we were, and this is where I use both the weekly options as well as the monthly expiration options. The weekly options are designed to last no more than a day or two to unfold, and they're very quick snaps between the support and this resistance, and where we just, in a sideways pattern, try to capitalize with very little risk. Lots of times these options will sell between $2 and $5, so it's a real economical way to get into this market at very, very limited risk. With the risk associated in here, trying to do this with a futures contract, look at this pattern in here. There's a 15-point move between the top end of this range and the bottom, and it just went back and forth for most of a day. That's a way to really get hurt in there trying to do the futures. But with the options and the deltas that we choose, we can really harness that risk and generate some really nice profits by being in a position to where we can move from one pivot point to the next. So let me very quickly go through these areas where in a sideways pattern, I'm just trading back and forth here, very quickly back and forth between the calls and the puts, establishing or taking off the calls at resistance and at support, either covering those net puts and getting along with the calls. We have a support formation in here. Three's always a charm, along with lots of accumulation in here in the large block orders. And this is where I wanted to go long the monthly expiration option for more of a swing move, which went very nicely here from 15 even up to 15.30, which was the all-time high, which made a lot of headlines. And we had this pattern in here, basically this reverse head and shoulders pattern at support at this 1500 even area, in which we were able to find some net accumulation in here. So this is where I got long both the weekly calls and the monthly calls, and I covered these puts coming down here. So this sideways action actually finances the risk for getting net long in here. The stop would be under this area of support here. So there's lots of area for error in here. Very, very difficult to precisely set yourself up with a futures contract. But with the options, and again, the deltas that we use, you can really withstand 5 or even 10 points of a move against the position without really getting hurt too badly. Again, playing the real limited risk options. And so taking off the weekly puts very quickly back up here in resistance, this profit will finance further participation on the monthly calls, in which we again rode up into here. Started to go into a sideways action where net long the calls, I put on a put position here, and so basically in here I'm hedged. I really don't have a net bias either way. I have a nice profit in place in which I lock in with these puts, and once we get down into the support area, I took them off. So I put a little bit more money in the kitty in here, created, again, third time's a charm. We had some nice accumulation in here with some large block orders, and I also went net long in here with some more weekly calls. Again, this figure and what I'm telling you here and what I send out is based upon just trading one contract. That's the risk here, one at a time. And with the volatility that is in these markets, you can do quite well. And really, a lot of the time in here, I have both puts and calls on, and we're just taking them off at the support and resistance areas at a time. Again, when I see action on the options, when I see action on the futures, and when I see big block orders on the stocks. So once we got up in here to this 1530 area, I was able to take off the calls that I had in place down here from 15 even. Sold the calls here on the weekly basis, which is again was about a 1 or 2 day move, about a day and a half. And then I also initiated puts on the monthly expiration, which came off very nicely in here. And actually, we saw activity in here in which I was actually able to put on some weekly puts as well. The idea here is to take a quick profit on the weekly put positions and allow that profit to finance further participation on the monthly expiration. It gives us some time to make the move on the swing. Profit for the trade was to come right back down here to 1500, which I did within just a few days. Sold off very nicely in here. We had a lot of selling up in here, large block orders, as well as a lot of accumulation of puts in here. And so seeing that, we had a nice push initially, and then it followed through, and was able to take the monthlies off here. Expecting a reaction off of this area with this kind of activity. Some large block orders came in here, and we got at least a reaction, and that's all I was looking to participate in here. Very quickly, from support up in here, back up into the middle of this range, just about where we based was the objective for that trade. Went up a little bit higher, and then we came in with some selling activity, and looking for a revisit, perhaps back down into these areas of support of 1500. And so we'll put on the monthly puts here as well as the weekly. Again, looking for a bit of a reaction back down into this area, which we did. Took the weeklies off. That financed the further participation of the larger swing move, which took us down into this area, 1500 to 1490. This was just a free fall in here, and we were very fortunate to capture that. And these sold off very, very nicely in here. When it's screaming down and you're long that put, it's easy to get filled, and it's usually above what the theoretical is. So that was really nice to be in a position. And again, a lot of these positions are financed by these weekly pushes, by these weekly expirations, these quick pushes that come into the market with the large block orders. Again, did a very similar thing down here as we did at the top. Had a base in here. Very difficult to trade in here with the futures contracts. With the right option and the deltas that we select, limited risk to get long in here and carry it back up in here with a very quick reaction move back up into the middle of this range with the weeklies, and then continue back up to resistance here with the monthlies. So really an outstanding month. And some of the times we were on both sides. All of the time the trades were basically financed by the previous move in using the weeklies and a low risk trade. So again, each day you basically get the same chart. I'm marking here the areas for the day. And when these areas are confirmed by the pricing action that I see in real time, I send out the alerts of exactly what we're executing, what we're looking to do for each trade, and how our trade will unfold. But this is basically our plan using both the monthly and the weeklies. The weekly puts for the very quick impulse moves, the the monthly to participate in the swing moves. Together, they represent a very powerful way to participate in these markets for the larger swing moves with very limited risk. And so I invite you to join us at oexoptionstrading.com. There's a subscribe link on the left-hand side of the navigation bar, and that will take you into the area where you can subscribe for the service. It's $100 a month, and again, what you get is exactly what you saw here. Trading plan on both the S&P 500 and the OEX, and the real-time alerts that are sent out by way of the Yahoo Messenger. And it really is a nice way to follow in real time how somebody trades options on both the S&P and the S&P on the OEX.